Hi, it's Brian Shannon from Alpha Trends Blogspot. Today is Sunday, the 25th of March, 2007, and we're going to take a look at some stocks for trading on Monday, see if we're going to make some money in this continuing volatile but up market. So we're just going to look at three longs today. First up is going to be Force Protection Corporation, or Incorporated. FRPT is a symbol, and it doesn't look like the ordinary bullish stock that I highlight on here. However, there's a really big short position in here that looks pretty tempting to me. That is, there's a 7.5 million shares that have been sold short and not yet covered. So I think that if this stock does get going, we could see some very quick upside for a trade only, though, because we do have a declining 50-day moving average. And I usually say guilty till proven innocent. So keep in mind that there's what looks to be a very promising risk-reward ratio that I'm going to outline in a moment. But also, because that 50-day moving average is declining, I think that if you take a trade like this, you want to remember that you want to minimize your risk. And I think the proper way to do that is to do less share size than you might ordinarily do in a trade like this. So enough disclaimers about risk and that sort of thing. But the stock here looks like it's consolidated. We've had a little bit of volume in here recently on this up move right here. It's a red candle, which is the thing that I don't like about candles, because the close was lower than the open, but the fact is it closed higher than the previous day's close, and it did so on very big volume that day. So I think that's bullish. And now that the stock has consolidated on very light volume in here and in a tight range the last few days, it looks like the stock can continue higher here again in the near term. So the way I think we ought to play this stock is to buy it above $17.20 a share. Let's see it take out Friday's highs at $17.20. We then set a stop. I think a reasonable place for the stop is right here, about $16.90. So that gives us about 30 cents of risk in this stock. And as far as an upside target goes, I think you can see it get up towards about $18.50 to $19 a share. And that's just up in this range. It's not even closing that gap. I think coming up towards the high end of that range, though, or the lower to high end of that range, will give us at least $1.40 if it's to make it up to $18.50 a share. So to risk 30 cents to make $1.40 is a very appealing risk-reward ratio. But again, I'm going to warn you that because the daily time frame, we've got a declining 50-day moving average. Don't think, hey, it's got such a strong risk-reward ratio, I ought to do double position. In fact, you ought to go maybe a half position because of that declining 50-day moving average. A little more bullish looking, I think, is Lawson Software, symbol LWSN. Looking at a weekly time frame here, you can see that it's had all this volume in here lately, and it broke out, but it's holding above this prior level of resistance. We've got all the moving averages heading higher on the weekly time frame. On this daily time frame, it's consolidated in a tight range. It's traded some big volume on Friday, and hopefully we can see the stock push up past the recent highs right here at $7.90 a share. I actually bought the stock on Friday right here, thinking that it was going to make a like day breakout. But I think that we probably, but then I sold the stock because I didn't want to hold it over the weekend. But I think that we want to probably get long the stock above this $7.90 level. Above that level, I think that's where we can really confirm that the buyers have control of the stock. We could then set our stop down here at $7.78 a share. So that would only give us really 12 cents of risk. So 12 cents of risk, and I think our upside target in this case is about $8.35. Let's take it up to about in this area where this gap occurred. So $8.35. That would give us 45 cents of upside for a risk of just 12 cents a share. So that seems to make sense on a risk-reward basis as well. Last stock we'll look at is, we've got the symbol, I thought I typed it in, EVC is the symbol here. And this company is called Entravision. And this is the more typical type of stock that I like to look at. You can see all the volume over here. It's above all that volume level, so the buyers are in control here. And now it looks like the stock's moving higher once again. If we look at the 10-minute time frame, I think we can just go above this $9.20 high right in here and look to purchase it above $9.20 a share. We put our stop down here at $8.98, so that's 22 cents of risk in this case. So we had a little bit of a shakeout low on Friday that undertook Thursday's lows, and I think anyone that was a kind of nervous seller probably got out in there. So that makes this area safe, I think, as far as where to put the stop. And so buying it above $9.20 with a stop at $8.98, I think the stock has the ability to get back up to $10 a share. That would give us 22 cents of risk for 80 cents of upside opportunity.